All right, hello everyone. Welcome to today's video. And yeah, my name is Moran, Pober. If you don't know me, I'm the founder of acquisitions.com and rollups.com with at this point over 1 billion in supported acquisitions. We've seen at this point our fair share of opportunities, and this is a deep dive today into a super exciting prospect. It's a well-established industrial equipment reseller that's currently on the market that we're working on with one of our clients. And this analysis will give you a comprehensive look at the business, its potential, and overall key considerations for acquisitions, my thoughts and analysis when I'm looking at a deal. And by the way, if you want us to help you find deals like this, analyze deals like this, or finance deals like this with banks or investors, look below. You can book a call with us. So let's get started. So yeah, if you don't know me, my name is Moran Pober. I'm the founder of acquisitions.com and rollups.com. And like I said, at this point we supported over 1 billion in acquisitions. Right? So, let's go to the business overview. So first, let's paint this picture of this company, right? Before we dive into the details, because at this point, this business, as you can see, got over 50 years in the industry. The business carved out a significant niche in the industrial equipment resale market, and they specialized in machinery for food, cosmetics, personal care, and pharmaceutical industries. I'm not going to share the name just for the confidentiality of the business, and of course, we're working on the deal live right now, so I'm not looking for more competitors on this deal, but I'm going to dive into a lot of the details. So just to quickly help you understand kind of like how I look at it with this business, what set them apart is to understand first of all that it's not just about buying and selling equipment. This company has honed the process of purchasing used machinery, refurbishing it to excellent condition, and then reselling it at a premium, right? So they've built this reputation not just for quality products, but also for valuable industry knowledge that they bring into each transaction with their clients. So it's kind of like a dual offering because you get both physical products and expertise, and it creates basically a unique value proposition in the market and uniqueness, which if you follow my videos, you know that it's super important. If you don't have a way to position yourself differently in the market, it's very difficult to compete, and the differentiation can sometimes be very minimal, like if you know how to position yourself differently. So here it's a partnership with their customers. It's helping them navigate overall this pretty complex world of industrial equipment. Like I can tell you, I went through this deal and I'm learning about this industry as much. Like I had to do some research before I can give you kind of like my thoughts on this. So let's dig right now into the numbers. That's what everyone wants to see, right? So the company it demonstrated pretty remarkable stable revenues over the past 4 years, and it's consistently kind of like at around 3.5 million mark. As you can see, here's the breakdown. So FY, by the way, that's fiscal year. So 2023, 3.5 million, 2022, 3.9 million, 21 at 3.4, and 2020, 3.5. So you'll notice that there's a bit of a spike in 2022. So whenever you see spike and differences in numbers, we always want to find out. So here, it's largely due to the increased sales that came during COVID from selling COVID-related equipment. So it's just showing the company's abilities, I guess, to adapt to market demands and conditions. So remember, every time you see different numbers in an extreme way, like you always want to figure out what happened, even if it's a good adjustment in the numbers. Let's go through other numbers because revenues is just part of the story. So let's look at the owner's adjusted earnings. So 2023, 906,000, it's 26% margin. 2022, 1.24, 32% margin. 21, 849, 2020 940, 27%. So these figures are pretty impressive. So you can see consistently showing margins in the 25 to 27% range most of the times, with again exceptional year in 2022. So if you remember, revenues went up, but also margins here, which is pretty amazing to see. This is going to up. It's showing that operations effectiveness is really good. And before we move to the next one, actually let's talk about gross margin, because here's where it gets really interesting. If you look at the gross margins, the company gross margins is basically at over 60%, which translates to a 165% markup. So let me just break that down. It means that if the company buy a piece of equipment for, let's say, $100, just to keep the numbers simple, they're selling it for $265. So that's $165 profit on a $265 sales price. That gives us this 62.3% gross margin actually. So this level of markup in this type of an industry, it's exceptional. It's really good. And it indicates, when we're looking at the deal, two crucial things. The first thing is that the company has a strong pricing power in the market. So customers are willing to pay premium for their products and expertise. And the second thing is that it suggests to us that it's there's highly efficient operations going on, kind of like what we saw in the previous slide. So they're able to add pretty significant value to the equipment that they purchase, and that's what allows them to justify higher resale price. Next, let's talk about the assets and facility. So this company operates out of a 20,000 square foot facility in New York. This location offers pretty strategic advantage because it's close to major transportation hubs and large customer base in their case. And the current owner, I think this is also good to know, is offering flexibility with the real estate. So you have the option to either lease real estate from him or buy the property outright. And I think this flexibility can be a significant advantage when you're looking at the deal, because it's allowing you to structure a deal in a way that best fits your financial strategy and your financing capabilities. So if you can't necessarily finance both real estate and the deal, you can pick one of them. Also, we see inventory, right? So in addition to this physical location, the sale includes 1 to 1.5 million inventory. And I think it's also a crucial point. From day one, it means that you'll have a warehouse full of sellable assets, which will allow you to basically create revenue immediately. And remember, with their markup, this inventory could potentially generate anywhere between 2.6 to 3.9 or so million in sales. So it's pretty good. Plus, having inventory means that you have another financing options. You can finance against the inventory when you want to do the deal. Let's talk about the staff. I'm sure I'm not the person who first one who you hear it say, but a business is only as good as its people, right? And this company seems to have a strong team in place. The staff includes 3 salespeople with 2 to 7 years experience. It's pretty good. 2 warehouse staff, each with super impressive 20 years of experience. This is really good. 3 electrical staff, 10 to 16 years experience. It's really good to see that. So this level of employee retention is a super positive sign, especially nowadays with all the Gen Z, like people change jobs every 3 months. So it really shows us, and it suggests that there's a stable work environment and like super deep company and institutional knowledge in this business. And the warehouse staff in particular, 20 years of experience each. So it means they probably have invaluable expertise in handling, refurbishing, and overall assessing kind of like everything related to this industrial equipment. So for the potential buyer, this experienced team could be a significant asset which obviously will provide continuity and expertise during the ownership transition and behind, and obviously making sure that we know what those employees have in mind in the transition is really important. We want to make sure that they stay, and if possible, even have a conversation with them before we close on a deal. Next, let's look at the marketing. So, yeah, the company's shown very much adaptability in their marketing approach. So, yeah, embracing digital first strategy. They're investing about $46,000 annually in marketing, focusing on website optimization, SEO, social media, email marketing. So that's good. Yeah, I mean, pretty impressive results. If those, by the way, those website sessions, that's in the last 12 months. Also the unique users and email subscribers are 24,000. I mean, it's pretty good for this industry. So these numbers for me suggest that there's a strong online presence and an engaged audience. And the email list especially, it's a super valuable asset because it's a direct line to potential customers that can be also leveraged for future sales and relationship building. Super good. Like they could probably create another revenue stream just with the email subscribers assets. Next, let's talk about the customer base. So while we don't have the exact breakdown, the company serves pretty diverse range of customers. So that's including manufacturers, distributors, and corporations. Every time you see diversity in businesses as far as customers, it shows for their strength. It reduces the risk that come with over-reliance on any single customer or sector. I'll probably want to see a breakdown of the revenue, like what percentage each of those represent if possible. And also, again, just think about the company longevity. There's over 50 years in business, so it just shows for their strong market position. They've clearly built a reputation that has stood the test of time. And in the industrial equipment sector, where purchasing are often high value and infrequent, I think this kind of reputation and trust is invaluable. So super interesting and good to see it. Reason for selling. So the owner stated the reason for selling is just to pass on to, pass on the family legacy. They're offering to stay on to train the new ownership. That's always good. So it's always positive for 3 reasons, right? So first of all, it suggests that there's a genuine desire for the business to continue to be successful rather than an urgent sell and exit and running away. Number 2, I think it provides valuable continuity in the transition for the new ownership. And it also offers an opportunity to learn and have this knowledge transfer, which will allow the new owner to benefit from decades of industry experience. So this willingness to ensure a smooth transition is a super good green flag in any acquisition you're looking at. Valuation. So the asking price for the business is $3.7 million plus the inventory. So given the consistent earning of $900,000 and $1 million plus, it's around, what was it, about multiple of 4 times earnings or so. So in the current market, I mean, it's reasonable valuation for a business of this nature. Obviously, we need to understand the terms and our financing capabilities and our cost of capital to really know better. Growth potential. Yeah, they demonstrated adaptability with digital pivot. Used equipment market often thrives during economic downturns. Potential for geographic expansion, like a lot of businesses. An opportunity for product line diversification. That's always good. And from what I'm seeing on the digital side, I think just a bit of a push there can continue to increase the business, because it sounds like they already do good things there. You just need to do more of them and to bring some young energy to it. Key strengths: consistent financial performance, strong gross margins, established market presence, diverse customer base, experienced staff, reasonable valuation for sure. So I think based on the information that we looked at, I think it appears to be an attractive acquisition target. And let me know in the comments below if you think otherwise. The company shows consistent financial performance, strong margins, established market presence, a diverse customer base, and also an experienced staff. So the valuation seems reasonable, and also there's potential for growth. Obviously, before moving forward, and I'll share that with my client, I strongly recommend, obviously, we don't want to conduct like thorough due diligence on the client list and revenue distribution. I want to understand who the key customers are, how diversified the revenue really is, because that will be crucial. We want to verify the condition and the value of the inventory and other assets, because especially with this business, given the importance of the inventory to the business model, you'll want to ensure its quality and sellability. And obviously that will determine how much we can finance against it if needed. Unless we want to use SBA, and that might be enough, but it's always good to know what else is possible. We'll want to investigate the competitive landscape more thoroughly, because that for me was just a high level overview, and understanding the company's position relative to competitors. So I want to check who are the competitors, because that will definitely help us assess this business strength and vulnerabilities. We'll want to probably assess the potential for geographic or product line expansion. This could be, I think, key avenues for growth with the new ownership alongside the digital marketing side of things. And overall, just we need to explore financing options in details, right? Including seller financing possibility. So if the due diligence shows that the information provided in this presentation is good and we can secure stable financing, then the company, I think, is potential solid investment opportunity in a super stable industry with a potential for growth and a lot of experience. Financing consideration. So the flexibility, the feasibility of this acquisition will largely depend on the ability to finance it. We'll probably, not probably, we for sure want to explore bank financing. So given the company financials and the assets, we most likely be able to secure favorable terms from the banks. Potential investors, of course, might be interested as well, so we can potentially connect you as well with them. Because this could definitely be attractive to equity investors, and of course seller financing, because the owner got a desire to ensure that the business continued to be successful. Then they might be open to providing more financing for this deal, and this could not only make the deal more achievable, but also align the seller interest with the ongoing success of the business in the future. So I think the biggest thing here is that the company's stable financials, valuable assets, the seller willingness to assist. I think all of those could really work in the favor when negotiating financing terms with debt providers, the seller, or equity investors. So my conclusion here, this industrial equipment reseller, I think it's an super intriguing opportunity. The long history, the strong financials, the experienced team, the owner commitment to smooth transitions are all positive. However, like any acquisition, obviously thorough due diligence is crucial. So remember, every investment, and this is for those who watch on YouTube, it's not an investment advice, but every investment in the end of the day carries risk, and individual circumstances, of course, are going to change between the people. So definitely a thorough due diligence is a must here. So hopefully, guys, this gives you a bit of an overview. Hopefully this is helpful with this analysis. If you find this valuable, like and comment below. Let me know if you like it and you want more of those. This was me, Moran Pober. reach out to us if you want to work with us on deals and enjoy doing deals with us or alone. I hope you appreciate it. If you like this, let me know. If you want other type of videos, let me know as well. I appreciate you. Take care.